On today's hot sheet, I'm discussing housing inventory, home builders buying down mortgage rates, and White House actions to promote home ownership. Today is Tuesday, October 17th, 2023. I'm Byron Lazine, and the hot sheet starts now. Good morning. Welcome to today's hot sheet. Thanks for joining me live. If you're here in the live stream, let me know in the live chat which market you're tuning in from. I'm back up in my Connecticut studio myself and looking forward to the rest of the week here with all of you. To get the most out of our content here at BAM, join BAMX. Use code HOT to get 10% off, where you get access to all of the hot sheets daily downloads, as well as all of our courses, extra content, and our private community. All right, let's jump into the inventory update in its totality. Yesterday, we did a brief update on inventory. We do that every single Monday, and that was only because Logan Mohtashami's piece was not yet released yet, where he takes a deep dive into Altos Research weekly update on inventory. We've been tracking this since the inventory crisis all year on Mondays here on the hot sheet today, and of course is on Tuesday. Okay. The story of 2023 has been slower growth. We know that in active listings, and then new listing data is trending at the lowest levels ever in history. And then as mortgage rates got above 7%, there are some, Logan Mohtashami, who's writing this piece here in front of me, that believed inventory would grow. That has yet to happen. He said it would grow between, I don't know, 11,000 and 17,000 is what he's quoting. And that just really hasn't taken place. We've gotten close, though. This past week in particular, we got as close as we've come in a long time. The inventory rose from 537,000 plus to 546,450 in the week of October 6th to October 13th. This is the inventory peak so far for 2023 at 546,450. The inventory bottom, of course, in 220 was 240,000. This same week last year, we peaked out at 567,452. So we are getting really close now to getting year over year positive, or not even positive, but just even with last year on inventory. Right now, we are net negative on total inventory year over year. 2015 active listings was at 1.177 million, far off of that mark. You can see here on the chart below, as well as available for BAMX members in the daily download, the steep nosedive we've taken since 2019. And before that, inventory was at even a healthier level across the country. Okay, let's take a look at new listings. This is something that in recent weeks has shown some signs of life at a time of year when new listing data always trends down. Now, we've had 13 months of all-time lows for new listings, so to see it buck the seasonal trend of the fourth quarter would be a welcome sight to try to get more inventory onto the market. National single-family new listings, though, this week is down a little bit off of last week. That's been the story all year. Not a little bit, though, a lot of it. Just look at the April through September months, where we had a huge gap between this year 23 and 21 and 22 on new listings coming onto the market. We're looking more like here in October, similar to what we looked like in 2022, still under that mark. And you see what happens at the end of the year for new listings. Not many people decide to list their home in December. So inventory, as we get closer to the end of the year, is going to get even tighter. This is the lowest levels ever recorded. We saw a slow week-to-week decline last week, and it's negative year over year. But that negative year over year at this point of the year, similar to active listings, is not a huge number. Let's take a look at price cuts. There's a belief here as these interest rates get to 8%, might hit a true 8 today. We'll keep an eye on that here towards the end of the show, where that might be headed. People believe there's going to be price cuts. Well, price cuts have not reflected the same level as last year, at this time when we had the initial interest rate shock. So look at the chart in front of you. We're well below last year. Last year at this time was 42% of price cuts for the same week, where this same week, this year's week, same week as last year, is only 38%. 2021 was only 29%, but we're 4% below the level of last year when we saw those price cuts really start to jump in after the shock of the rates going up. Purchase application data, of course, it was up 1% last week and is really at the lowest level we've seen in quite some time, lowest level by far in the last 10 years. This is on the 4-week average and the overall index. So you're still seeing demand really get crunched as we continue to see interest rates higher for longer and what that will do to the market. Well, Lennar and other national home builders have an answer for these higher for longer interest rates. Housing affordability is stressed, but Lennar is offering a fixed 4.75 mortgage rate in Colorado. Okay, so this is the response to the ongoing mortgage rate shock. Home builders across much of the country have adopted a strategic approach to stimulate home sales by offering net effective price cuts, writes Lance Lambert with his new site, Resi Club Analytics. This approach stands in stark contrast to the existing home market, where home sellers in most markets, especially the Midwest and Northeast, have been reluctant to lower their prices. I could tell you in the Northeast, they don't really have to because you've got the lowest inventory across the country. While some builders have resorted to straightforward price reductions, KB Home CEO Jeff Mesger said that that's his preference, to just offer the reduction, not the interest rate reduction or a cash incentive upon closing. The preferred tactic among many of these builders is offering these mortgage rate buydowns. D.R. Horton, that's their preference. These buydowns vary in duration, have demonstrated their potential to incentivize buyers, and some offer temporary rate reductions for initial years, while others extend the benefit throughout the entire loan term. So a buyer coming in and looking at new construction and getting the like headline, like, look at this tweet here. Okay, this is an actual advertisement that John Burns put together from Pulte. Okay, it's like a timeline of their advertisements. Rick Palacios Jr. from where is Rick from? Rick tracks a lot of this stuff on Twitter X. This is the evolution of one big home builder's mortgage rate buydown offering through 2023. This is Pulte Homes. This is a chart from John Burns Consulting. You see there, April 17th, 30-year fixed rate, 4.99. Then you go to June, 5.25. Now you see them popping up as the rates are going up. They can only cut so much, but these are very attractive compared to 7.5, and 8. July 19th, it was 5.5%, and October 10th, you had 5.75%. Now it says special financing. Scroll down for offer details in small text on the bottom. And I would advise any buyer looking at these offerings to make sure they're equipped with a professional buyer agent who can go in there and review this. I'd also want the professional agent that's representing that buyer to work with a outside lender to review these terms, because we just read there, some of them are initial years. I mean, what happens in 3 years when the thing pops? Can you afford it? Remember how many people got in trouble with that during the GFC with an interest rate that goes back to market? If we're going to have higher rates for longer, can you guarantee that when that mortgage changes, that it's not going to be lower, right? You can't guarantee that. And so you really want to pick that apart and make sure that it's fully understandable. A company like Pulte or some of these other national home builders, they're just going to try to jam the sale. Okay, let's get the thing done. Once they got you signed, got the deposit, there's going to be some pressure. Anybody that's dealt with one of these national home builders, every step of the way, it's like they're always in a rush. Hey, need an answer on that, like in the next 14 minutes. Let me know if you've worked with a national home builder and you've experienced that. Need an answer now, right? When it's on their timeline, it's always a rush. And so they want to move you across. You need to get educated along the way. Agents really need to know what these guys are offering so that they can educate clients. Jody in OKC says, just sold a new home build, 7,000 incentives to use as they wish. So, and this is also how they get you, right? 7,000. And I'm not saying that's a bad deal, Jody. I'm sure you got your clients a good deal. But these are some of the headlines. These are some of the lures that they're going to use to hook buyers in. 7,000 incentives, special financing. They can do this because they're the ones with the inventory, these national home builders. Okay, so they're going to be able to entice a lot of buyers out there that are feeling like there's no opportunities available for them. If I'm a real estate agent right now, think about how vulnerable buyer agency is. Okay, there's a big antitrust lawsuit that just started yesterday out there in Kansas City about some of this stuff. So think about the debate of, are buyer agents actually of value right now? The ones that know everything about the new construction in their communities, whether, and I hear this from agents all the time, yeah, but those builders, they're not offering me a commission. They're not offering me anything to bring the buyer, this, that, and the other thing. Where we're going, buyers are going to have to show their value, or I'm sorry, buyer agents are going to have to show their value to the buyer agent, to the buyer directly. The buyer agent will need to show that value directly. You can't show that value on new construction unless you know absolutely everything about the community, unless you know absolutely everything about the incentives and the terms that they're offering. Then you could go to a buyer and say, listen, I've done the research, I've done the study. Here's the data that I have. I've done a bunch of reports on it. Here it is. And I can work you through this process on your end. Okay. And here's my fee to do that. That's going to be what it takes. Don't blame the builder for not paying you. Blame yourself for not digging in to everything that they're offering and knowing it inside and out, so that you can, because I can tell you one thing for sure. The salespeople at these national, home builder communities, the salesperson for Pulte or for DR Horton or for these, most of them aren't going to know or help anybody. You can walk in there and they're not going to be worth much help at all. They're just sitting there waiting for deals to come together and they can move to the next one. They're clock punchers. They're not agents. They're not fiduciaries. They're not out there working and representing. That leaves significant opportunity for real estate agents and real estate professionals. But in your market, you need to know absolutely everything that's being offered, that's being advertised, that's being articulated from these national home builders, because they're using great marketing tactics, great hooks to bring people in. It's our job as real estate professionals to go in and uncover the details, the fine print, know exactly what it is that they're offering. So just keep that in mind. Here are some other numbers here. And listen, all of their stocks, these national home builders, they're all doing really well. I mean, take a look at this. Publicly traded home builders continue to post strong earnings. If you go to this recent quarter here, everybody's got really strong earnings. Toll Brothers, Century Communities, MDC Holdings, Meritage Homes, Lennar, they're doing very well because they're controlling inventory. Just look at the last couple of years. Their earnings have skyrocketed in comparison to previous years for national home builders. Okay. And so here are some of the other headlines that you might see. September 19th, Lennar was advertising 4.25% buy down in Colorado. As mortgage rates have ticked closer to 8, Lennar has moved its buy down from 4.25 to 4.75. Okay, still very attractive. Okay, you've got Pulte Group for the chart I showed you, 4.99 in April to 5.75 as of October. You've got Lennar has an offer valid for those who sign a purchase agreement on a select move-in ready home in Colorado between 10/10 and 10/16. So that's some of that fine print. These are the things, and they change, weekly or bi-weekly. These are the things as real estate professionals in your community, you should know inside and out. The White House is making some moves and trying to really make their impact on homeownership. They don't want to leave it all just to the builders. And they put out a memo yesterday saying as much. The White House announces new actions on home ownerships. Okay, they lead their statement by saying, for millions of Americans, home ownership is a foundation for so many parts of their lives. Hey, JB and the team over there in the White House, let Jerome Powell know that. Okay, yeah, it is a foundation for so many people and their lives, but Jerome Powell is destroying that foundation. I think he might own a whole bunch of multifamily apartments or something because he wants everybody to be a renter. They say for many, it is their primary source of wealth. Again, let Jerome know. Let your buddy Jay Powell know. The Biden-Harris administration, though, is committed to expanding access to home ownership, ensuring homeowners can afford to stay in their homes and make the repairs they need, and that the wealth building potential of home ownership works equally for everyone. Okay. Yeah, this is a real problem. I'm glad they're acknowledging this in the memo yesterday. Let's see what actions they actually have backing up the memo, because I think we can all agree affordability has been crushed. Home ownership is escaping many Americans right now. So we broke it all down on BAM, on nowbam.com. You can find this. And let's take a look at what these new initiatives are. Number one, leveraging income from ADUs, allowing homebuyers to leverage existing or potential income from their ADU to qualify for an FHA insured mortgage. Okay, so this means you're already a homeowner because you have an ADU potential income, or it could be on the purchase. Okay, so it's existing. That would be a current homeowner, or potential income. So if you're buying a home that has an ADU as a first-time home buyer, maybe our California agents can chime in on this. Does this change the game for first-time home buyers who are buying something with an ADU on the property, where they can now calculate the potential income from the ADU to qualify for FHA mortgage? I know ADUs are big there, so maybe there's somebody who can chime in on that. Increasing mortgage opportunities for Native Americans, awarding $9 million in loans to 9 Native American community development institutions to make home ownership accessible for Native Americans on tribal lands. Love the initiative. $9 million is not much. Just think about all the other money Washington spends on far less significant initiatives. Simplifying home repairs financing, revising the 203K rehab mortgage insurance program to make it easier for homeowners and homebuyers to finance needed home repairs, potentially adding the supply of livable housing on the market. This could be one that actually makes an impact. I know, just shout out to Tomo. I know Tomo Mortgage has a product it's a conventional loan where you can finance in the repairs. It's not a 203K. You make some more of this happen where you can finance in the rehab of the property, but you can make an offer. Say the rehab's going to cost $75,000 and you're buying the house at $500,000. If you can make the offer at $500,000 to be competitive so that the seller doesn't get confused by the loan, and then you're still able to finance the $75,000 to put in. Obviously, comps have to support that on the finished product. That is something, if they make that easier across the board for banks to do, that I could see making an impact. We have so much inventory we don't have inventory active on the market, but we have so much inventory that's locked up that eventually, as boomers, release these properties onto the market, I'm talking 10 years, some of these properties coming onto the market they're going to be inventory, but they're not going to be desirable inventory. Not a lot of people want to buy, that 1957 home if it still looks like 1957. It needs a lot of work for a buyer to want to be able to go out and buy that property. Assisting at-risk homeowners. So they're got initiatives here to streamline and simplify rules to help homeowners that are struggling to pay their mortgage. Okay, so that's a measure to enable people to keep their house. Now, that's a great thing there, but delinquencies are near all-time lows. So you're not really solving a problem with that, right? We need more inventory, DC. Assisting veteran homeowners in retaining their homes, providing a long-term solution for veteran borrowers who are behind on their mortgage payments, but who do not qualify for traditional assistance programs. And then test initiative homeownership models, piloting alternative eligibility criteria for community land trust organizations through the USDA's Section 502 direct home loan program, which could potentially expand affordable home ownership opportunity. They're always looking to expand bottom up. Let's make it, let's give assistance for someone who's struggling to pay their mortgage. It's a very nice thing. Let's go and create new loan offers for more people to buy home. If you don't have the inventory, you're going to get beat out by investors and such every single time. So nice headline, nice try, White House. You didn't really do anything here, in my opinion, until you lean on Jerome Powell, until you get these interest rates down so you can open up the glut of inventory, which all points side to higher for longer. You're not going to solve, because you're not making any moves to help builders out, build cheaper and hold them to a standard of affordable housing. Nobody's been able to bring that to the market. So the other thing would be interest rates to get deals flowing again, to get inventory moving again. And none of this really offers that. So a couple nice things, nice headline for Joe Biden and his President Biden and his administration, but nothing really that's going to solve a problem for home buyers looking and competing in this unaffordable market. We had some economy news this morning that'll impact the inflation discussion. Retail sales rose 0.7% in September, much stronger than the estimate. So consumers showed surprising strength in September, boosting retail sales well above expectations despite high interest rates and worries over a weakening economy. When you hear that, you say, wow, consumers are showing surprising strength in September. Sounds like a positive. Well, it's not a positive. Here's why. The 10-year Treasury off of the news today hit its highest peak since 2007, breaking the previous peak that we just set. Look at 830. Look at the chart if you're here on YouTube. Look at 830, which is when that news came out. Look at what the 10-year did. It skyrocketed up. What does that mean? How investors feel about the U.S. consumer showing strength on retail sales. The investor is saying the U.S. consumer is a dummy, and we're now worried even more about the economy than we were prior. That's why you see the 10-year shoot up. That's why today, to lead off the day on the markets, you see that the Dow, the S&P, and the NASDAQ are all down. Because the investor looks at that and says, what are you doing, consumer? Interest rates are at these mega highs. Your savings has been depleted. Your credit cards are running up and credit is becoming less accessible every day. And you're going out in September and buying crap at retail stores. You're continuing to ignore the signals of what's going on. And so that worries investors on the long-term approach of the market, and they make a reaction like they did today, and the 10-year shot up to the highest mark of 2007, which means today we'll likely see the new high set for a 30-year fixed in the last 23 years. Okay, yesterday we went back into the 7-8 territory on the 30-year fixed Mortgage News Daily Survey. We could see our first true 8 on the daily survey today, just based on how the 10-year looks. Okay. Consider subscribing. If this hot sheet is adding you value in the morning, please subscribe to the YouTube channel. If you listen to the replay on Spotify or Apple, I appreciate you. Thank you. I'd love for you to consider leaving a review on either of those two platforms. If you've already subscribed to YouTube and you didn't know we had the audio pod, we do. Love for you to consider leaving a review there as well. Thank you guys so much. Hope to see you in BAMX. That link is down below. We'll see you back here tomorrow on the hot sheet. Until then, toodaloo.